of the reasons is that these tariff deals look a lot better than anybody projected. He's come way down on the tariffs. So gold was down some $18, but it's still at that $3,367 an ounce. It was about $100 almost up from that a couple of days ago, but still doing well. And Bitcoin, it's hanging in that 119K range. And again, we're positive on it because the Trump family is in it. So now going back to Trump pushing Powell to lower interest rates, we're talking about the dollar slipping. The lower interest rates go, the deeper the dollar falls. The deeper the dollar falls, the higher gold prices go, because gold is dollar based and it's cheaper to buy it. Home prices hit record, sales stall. So that's why we've been saying this over and over. And people said when they said the prices are going to come down sharply, we said, yeah, in some places where they overbuilt, but not overall. The S&P 500 and Nasdaq Composite, yep, keep going up, eked out new records. The Dow was down 316 points because IBM, the shares fell some 7%. Tesla dipped 8%. And again, we got negative on Tesla when Trump got negative on Musk. And again, we're writing about this week after week in the Trends Journal, even before that, actually. What else? Investors also tuned their attention to the ongoing feud between President Donald Trump and Federal Reserve. The White House said that Trump will visit the Fed today, which he did, and pressure Powell to lower interest rates, which he will. Will he lower them now or in September? Who knows? But they're going to come down. And also the stocks went up because the Financial Times, this is from the CNBC, reports that the U.S. was inching closer to a trade deal with the European Union. And Bloomberg also confirmed the progress, citing the trade deal would raise tariffs on 15% of imports from the EU. And that's what happened with the Japanese deal, 15%. So there you got it. Way down from where they started. But, and again, I'm positive I believe in tariffs, just so you know.
Tensions are rising between Donald Trump and the Federal Reserve. Reports indicate that Trump pressured Fed Chair Jerome Powell during a visit to slash interest rates, fueling debates on whether rates will be cut now or later in the fall. As inflation simmers and borrowing costs remain historically high, lower rates could offer temporary relief. But the Fed faces a dilemma: act politically or stay independent. A falling dollar is already shaking global markets. If Powell yields, expect both currency value and savings rates to decline further, putting more pressure on everyday Americans and giving gold and crypto room to surge.
The motto of the Trends Journal is think for yourself. Again, before that little, I got to watch what I call them because I don't want to get arrested, thrown in jail, whatever, Beware of Slick Willie. This is a t-shirt I did when Clinton ran for president in 1992. This is the guy that sucked our jobs out with NAFTA manufacturing. Yeah, go down to Mexico. You get cheap labor down there, right? This guy's worth what now? About $140 million. A little nothing of a clown boy. His payoffs. Brought China into the World Trade Organization. And very important, because China did not have the high-tech and heavy industry capabilities for manufacturing that they have now. It was the Western countries that moved their manufacturing over there to make more money, hiring slave labor back in the day, going back almost 25 years ago. And now China has what they gave them that they didn't have before, and they're going to be leading the way in a lot of ways, and we're going to get to that a little later on. Tariff framework takes shape as U.S. converges on EU deal. Japan agreements for a 15% duty. puts a new path in focus. That's the language from the Wall Street Journal. The 15% on Japanese autos represents a reduction from the 25% that Trump has said.
Markets spiked on news of progress toward a U.S.-EU trade deal. Bloomberg and CNBC confirmed Washington was eyeing a 15% tariff on European imports, mirroring Japan's recent agreement. The Japanese deal notably reduced tariffs on autos from 25% to 15%, but critics argue it still undercuts U.S. automakers. Worse, Japan's financial institutions agreed to funnel $550 billion into U.S. infrastructure. Though pitched as a win, critics call it lopsided. Meanwhile, America's own auto industry is bleeding from within, as nearly 4 million vehicles were imported from Mexico and Canada, places offering cheaper labor and fewer regulatory constraints.
And what else? The deal agreed upon by Japan and the U.S. also contains a novel financial commitment that the administration says will involve Japanese banks and financial institutions contributing $550 billion to a fund that the administration can then direct to infrastructure projects of its choice. So, looks like a good deal. But U.S. car makers blast Japan deal, and that's according to the Wall Street Journal. Any deal that changes a lower tariff for Japanese imports with virtually no U.S. content than the tariffs imposed on North American-built vehicles with high U.S. content is a bad deal for U.S. industry and U.S. automakers, said Matt Blunt, head of the American Automotive Policy Council. Overall, you ready for this? About 3.7 million cars made in Mexico and Canada were imported and sold to the U.S. As I said, they went down to Mexico, get the cheap labor, get them made over there. Don't pay the American people. We're only plantation workers of slave land here. You could get a job at Walmart, all right? Chinese automakers in Brazil I prize all of Latin America. This is an article from the New York Times. Good article. And it's showing how China is taking over much of the auto world, particularly in EVs. For the first time in decades, we're seeing a real challenge to the dominance of American and European brands, not just in terms of market share, but in terms of future mobility, said Natalie Unterstall, president of a climate research and advocacy organization. Blah, 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 blah. So that's it. And as dollar slips, euro is on a roll. The euro has risen more than 11% against the dollar. And again, going back to the markets, you saw gold go down today. And
China is rapidly taking over the global auto market, especially in electric vehicles, EVs. According to the New York Times, Chinese car makers are now expanding aggressively into Brazil and Latin America. This isn't just about exports. China is rewriting the rules of industrial dominance. Fueled by Western outsourcing in the 1990s and early 2000s, China built a manufacturing empire. Today, it leads in technology, high-speed rail, and electric mobility. With more than 1.4 billion people and a surging education rate in engineering and technology, the balance of power is shifting. America's industrial base, once unrivaled, is now in retreat.
One of the reasons is that these tariff deals look a lot better than anybody projected. He's come way down on the tariffs. So gold was down some $18, but it's still at that $3,367 an ounce. It was about $100 almost up from that a couple of days ago, but still doing well. And Bitcoin, it's hanging in that 119K range. And again, we're positive on it because the Trump family is in it. Now going back to Trump pushing Powell to lower interest rates, we're talking about the dollar slipping. The lower interest rates go, the deeper the dollar falls. The deeper the dollar falls, the higher gold prices go, because gold is dollar based and it's cheaper to buy it. Home prices hit record, sales stall. So that's what we've been saying this over and over. When people said when they said the prices are going to come down sharply, we said, yeah, in some places where they overbuilt, but not overall.
The U.S. housing market remains red hot despite lagging sales. In June, the national median home price hit a record $435,300. Trump blames the Fed's tight monetary stance for stalled sales, but rates are tied more closely to Treasury yields. Gold prices dropped as optimism over trade talks reduced fear, but with the dollar slipping and rate cuts likely, gold's long-term trajectory remains bullish. Meanwhile, Bitcoin holds steady near 119,000, buoyed in part by its adoption within the Trump orbit. As interest rates fall, the dollar weakens, pushing up real assets like gold, silver, and digital stores of value.
And this is an article, this is how they from the Wall Street Journal. President Trump has said the Federal Reserve is to blame for the slow housing market, although mortgage rates aren't directly tied to central bank actions. Instead, they tend to move with government bond yields. All right? So that's the deal. So the bond, what are you looking at? It's over 4%. And they got to come down. So the housing market's stalling, but the prices are still high. You ready? The national median existing home price in June rose to $435,300. Can you imagine that? I moved to Rhinebeck in '79, and then I bought right on the border of Milan, town of Milan. Bought a house. The house had to be totally redone. On 8.5 acres. Across the street, 10 acres. Up the street, 16 acres. You ready? $28,000. All right? No inflation. No, we don't count housing into inflation. The inflation numbers are way higher than what they're saying. That's the reality, by the facts. Big luxury brands reduce pace of price rise as wealthy consumers push back. Again, every week we've been writing about how luxury sales are going down, making it clear that the fish rots from the head down. Price increases drove 80% of the sales growth between 2019 and 2023, according to McKinsey. Yep. A large Chanel flat bag, which retails at 11,100 euros, has become more than 80% more expensive over the same period. This is from the Financial Times.
Trump is now pinning hopes on artificial intelligence, declaring America must win the AI race. However, China may already be pulling ahead. Backed by a population 4 times the size of the U.S. and an aggressive STEM-driven education system, China is churning out tech talent at unprecedented levels. While U.S. venture capital floods the AI space, a bubble may be brewing. Most AI startups remain unprofitable, echoing the early 2000s dot-com bust. Trump calls AI a baby that must be nurtured, but experts warn overinvestment without returns could backfire. China's AI ambition is strategic. America's may be political.
Who the fuck would buy a fucking pocketbook for 11,000 euros? How fucked up can you be? Oh, look at that pocketbook. Anyway. Trump intends to unleash AI to spur boom. This is the news that's going out there. And Trump went on to say, America is in the country that started the AI race. And as President of the United States, I'm here today to declare that America is going to win it. Want to bet? Want to bet? China is going to win it. Again, one of your top trends, not a top trend, but a trend this year, .com bust. All right? They've overinvested in these companies. Here, here's an article. AI talent frenzy is mixed bag for venture capitalists, showing how much money they're putting in these places and nothing coming back. You don't overinvest. Trends are born, they grow, they mature, reach old age, and die. And AI was just born 3 years ago, 2022. And as we've detailed, China, again, going back to, I got to be careful, Bill Clinton, Slick Willie, who brought China into the World Trade Organization in 2000. There were only 10% of Chinese 18-year-olds went to college. Now some 70% are. And they're very high-tech engineering-minded people. But of course, in the United States, you get a degree in gender studies, art history, some stupid crap. And so they're going to lead it. Again, we got 347 million people. They got 1.4 billion. So this is what Trump is doing here. The intention may be good, but the reality is going to be different. We're going to make this industry absolutely the top because right now it's a beautiful baby that's born. We have to grow that baby and let that baby thrive. We can't stop it. You got it. It's a baby, babyface. It's a baby. And you don't invest all your money in the baby. That's what's happened.